Hello ladies and gentlemen, my name is Bookkeeper Fizan. In today's short video lesson, I am going to teach you about the reversal of impairment. Understand, this is a very important lesson you need to understand. As you know, in my previous lecture, in my previous class, I taught you about the how to record the impairment and what is the impairment test, right? So I already taught you about the impairment, how to record the impairment. Now let's learn in today's class impairment as well as reverse of impairment. Understand? And one thing I want to tell you about, according that under IAS, under US GAAP we can't reverse the impairment, but under IFRS we can, but we have a condition. According to IAS 36, we have a condition, and that condition is that your recoverable amount, your your this one, as you can as you can see, this one, which is you can say recovery amount, which is can't exist, reversal of recovery can't more than the historical book value. Understand? So we will study about it. So let's discuss the scenario. A company purchased a vehicle for $100,000 on April 1st with an expected useful life 5 years. On March 1st 2022, due to a decline in market demand, where the vehicle's carrying value was impaired to 4,000. First of all, we need first recording this depreciation, we need to test whether it is impaired or not, whether the asset is impaired or not, right? On 5th of Feb, the market demand increases and the vehicle's fair value rises to 80,000. I will come to you later. I will come to that later. First of all, we need to record the transactions. So depreciation year 1, as you know, we purchased asset on April 1st, so we have calculated the 9 months depreciation. Then the next depreciation, which is the full year 2021 full year, so $20,000. I am using straight line without salvage value, right? Okay. The total accumulated depreciation before you can say before impairment is studied. We recorded vehicle debit, bank credit, depreciation expense debit, cumulative depreciation expense debit, then the full year depreciation, then the 2 months depreciation. Understand? Because why 2 months? Why I record this depreciation? Because our asset is impaired on March 1st, so we have to record a January February depreciation of 2022. Understand? So I calculated this and I already made the entries. Now I need to calculate the book value. Original amount minus accumulated depreciation before impairment. So this is the book value of this. Recoverable amount, which is the market value. As you know, recoverable amount is the market value. Okay, we just did the test, and the test, the formula is, that test is that if your carrying amount means book value is greater than your recoverable amount means market value, so you have to impair the asset. Otherwise you don't need to impair the asset, right? Otherwise we don't impair the asset. Why? Otherwise the scenario is, understand, I will again explaining you that I'm going to again explain you that if your carrying amount is greater than your market value, then we have to record the impairment. Otherwise, if your carrying amount means book value is less than the market value means recoverable amount, then we don't need to record the impairment loss, or we don't need to calculate impairment. Understand? Okay, so in this case, if I see my recoverable means market value is less, so that's why I need to record the impairment loss. What is the formula of impairment loss? To calculate the impairment, book value minus recoverable amount, so you will get the impairment loss. So record it on April 1st. Impairment loss expense debit, vehicle, you can also credit the directly vehicle or accumulated impairment loss credit, right? The best way is direct credit the vehicle, right? Because we don't normally we don't record impairment annually, because we record not a lot of time, right? Like depreciation we record annually, right? Again and again. But impairment we don't record, right? We don't do that. Once in a while we do the test. Okay, so depreciation December 31st, but with the now this time I will take the recoverable amount, not book value, right? I will take the recoverable amount. So this I take this recoverable amount, because my new value is now this market value, right? So on the basis of that, I need to calculate because I've already calculated February till February 2 months. Now I need to calculate more 10 months more depreciation. Though I calculated, but 10 months depreciation with this value. Then, as you know, on 5th of Feb I need on till January I need to calculate the depreciation. So again, one more month I need to calculate depreciation. Understand? I calculated depreciation one more month. So I calculated one more depreciation. This is 1 month. So I total this. This is the accumulated depreciation after loss. Understand? So I need to record it. Let's record. Let's make the entries this, then this. Right? Okay. So now market trend changes. My fair value means my recoverable amount is increasing. 80,000. Before that it was 40,000. Now again trend changes. Now it became 80,000. Oh my God! But here is IAS 36 tells us that we can't record the full recoverable amount 80,000. Understand? No, we can't record this. We can't take this $80,000. Here IAS 36 comes. Okay, it tells us IAS 36 if the recoverable amount is equal to your historical depreciation, historical cost, historical book value, right? Let's calculate historical. This is our book value, which we are doing right now with impairment. It is without impairment, a normal historical depreciation. Let's depreciation we take. For example, depreciation this year take. The historical depreciation is this. Total accumulated depreciation is the original cost. You know what was 1 lakh. So the book value can be this. Right? If historical book value, this is historical, this is real life book value, which is with impairment loss and depreciations, right? So always your with impairment your book value is less than the historical book value. Always, it can be always, right? Okay, so what we need to do, we have to take recoverable amount is not exceeds the point is to tell you is that your new recoverable amount, whether trend changes, but your new recoverable amount should not be exceeded with this 45,000. Although it is 80,000, but we can't record it. We can't take 80,000. We have to take 45,000. Understand? So historical book value not exceed than historical. This is IAS 36, right? It is not. It is shouldn't be exceeded than historical book value, right? So we have to take the 45 till this is the limit. 45,000 we can take. We can't take 80,000, right? So recoverable amount reverse. Recoverable amount is this 45,000. Book value is this. Recoverable amount is this. So 12,000 reversal of loss. We can record 12,000 reversal of loss, right? So the point is that if I see, so it already, if I add the recovery, as you know, so it always matches the historical, then it matches the historical. That's the point to limit the recoverable amount reversal, right? So because it will otherwise it will exceed. If I take at 80,000, if I take 80,000 here, sorry, if I take 80,000 here, for example, if I take 80,000 here, so it will exceed 47,000, which is can't be possible in real life, right? It is exceed the historical book value, right? It can't we do that. We can't do that. Understand? We can't do that. Okay, so that's why the point is that so we have to take only 45,000. We can take only 45,000. Understand? So that's the point. Okay, so what we need to do is that just we already calculated reversal of impairment loss, which is book value minus a recoverable amount. We have the 12,033, and we already did the test, and the historical book value we just said it matches, right? That's called its matches. Book value of this and original book value and historical book value matches now after adding the recovery. We can't add the recovery here because this is historical book value, this is real life, that's why it matches now. After recovery, when we add recovery in the book value, it matches now. This is the concept of recovery reversal. Okay, so we just added how to add the recovery. It's very simple. Vehicle debit, impairment loss credit. That's it. We are just reversing the impairment loss. So that's the entry of reversal. Vehicle debit, right? Vehicle debit, impairment loss credit. So okay, that's, you understand. Then on 1st of June 2024 we sold our vehicle. Understand? So we have to calculate, as you know, 5th of Feb we have to calculate the December 31st 10 months depreciation we already calculated, sorry, 11 months depreciation we already calculated till January, but we need to calculate 11 more months, then 5 more months, 11 plus 5 17, that's the case, 16 more months till right. So let's calculate. So till first of all till January, till December we need to calculate. So what is the depreciation? The depreciation of 11 months till February, till December, this is with the new recoverable amount, right? Now this is the new amount of us. Just take the 11 months depreciation and then 5 months depreciation from January till June before selling, right? This is the depreciation. Okay, so just accumulated depreciation, make the entries December 31st 2023, this, then June 1st, this. Now on June 1st we are selling our, finally we are selling our asset. So what the cost we need to do, whether we need to take the original cost which is 1 lakh, or whether we take the book value which is this recoverable amount, or current recoverable amount, because we need to, let's if you are confused, let's calculate. First, as you know, our asset is this, right? Our asset is this, 1 lakh the prices. Then we calculate the, we have to take all the accumulated losses and expenses, right? So what I did is, let's see. As you know, I take this is the asset value, debit, right? Then minus, decrease the asset with this price, then decrease this with the price, then again with the loss, right? Vehicle credit, because we credit the vehicle, understand? Or accumulated loss, whether you take impairment, accumulated impairment loss or vehicle, it decreases the amount of vehicle. So less this again, then less this, then less this, understand? Then add this, understand? Okay, let's do what we did is, here's the same thing. Take the original amount, then plus, minus, then plus, which is the vehicle debit, right? Which is the debit. Then taking minus. Why taking minus? 12,000 of this. Taking a below depreciation of 12,000 after the impairment gain, right? So the total vehicle account is 33,000, right? So this value is book value. So we take this 33,000. Understand? This is our book value, 33,000. So 45,000 vehicle amount, we take this, we need to take our current recoverable amount. Understand? We need to take our current recoverable amount. So the book value of the asset, which is we already calculated, same with this. Understand? So this is the book value. Accumulated depreciation is 12,000. The which is after the recoverable amount, which is 16 months depreciation, right? This is 16 months depreciation. Okay, book value is this. Now cash which we are receiving, as you know, 45,000 we are receiving when we sell our asset. This is on June 1st, 45,000. Let's go back. Okay, so we add the cash. Now you know, when our book value is less than the selling price, so we earn the gain. When our book value is greater than the selling price, we earn a loss. So this time we earn a gain. Understand? It's very simple. It's in front of you. Now record the entry. We already recorded depreciation entry of all the things done. Now only the entry is remaining, which is selling entry is remaining. Like cash. What is cash? Let's record. Cash is this. Accumulated depreciation again. No, sorry. Accumulated depreciation is debit, which is this. Why is debit? It is bank, right? Because we are receiving cash at bank. Whether it's cash, I know cash is, but we have to submit the bank. Bank is also an asset for you. Whether you write cash or bank, it's the same thing, right? 45,000. Accumulate. Why we are debiting is because we have to close the depreciation from our books. We have to write off the depreciation from our books because we are selling it. Finally, we don't need accumulated depreciation, right? In my books. Again, vehicle, I also, when it's original value debit. Now I'm going to credit it. Vehicle. That's it. Gain on sale. Gain on sale always we record in the credit side. If we earn a loss, we have to record the debit side. How to check it? It's very simple, ladies and gentlemen. Just plus it, plus this side and plus this side. They are always equal. Understand? They are always equal. These two sides are always debit and credit. So ladies and gentlemen, you just learned how to record the reversal of an impairment. It is very easy, ladies and gentlemen. Very, very easy. So, and we don't record impairment loss or every these things every year. No, 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 no. We once in a while, when we have a huge difference between the carrying amount impaired, which is if we are have a huge, for example, this like 1 lakh, like 40,000, right? So a book value is, as you can see, not it's huge not a huge difference, but 61,000 and 40,000 is a difference, but not like 2,000 or 3,000 difference. No, 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 no. We don't need to impair in that situation, right? So I will meet you in the next video. I hope you got the concept of recovery of impairment. Until then, take a very good care, sir. Bye bye. Have a nice day.